Welcome back. As promised, let's talk about the consumer discretionary space, which basically covers jewelry company, the apparel company, the footwear, innerwear, even QSRs, for instance. And Q3 has been a bit of a tough quarter for most of these segments, despite it being a festive season or wedding season. Abneesh Roy, the Executive Director at Nuvama Institutional Equities, is with us on the show. Abneesh, you cover a lot of companies, but first let's break it down category by category. Give us the growth numbers for QSR, for wellness, for jewelry, for footwear, and even the shopping per se companies. What is it that we've seen in Q3?
Sure, thanks. Yes, you rightfully said that, yes, Q3, in spite of softer base, because the slowdown last year had started in Q3. So ideally, we should have seen some kind of an improvement, but that did not happen. And Q3, initial expectation of the market was because full benefit of festivals, because festival was delayed this time. Last year, the festival benefit was also there to an extent in Q2. This time, Q3 had the full benefit. And wedding season also was quite strong, more than 35 lakh weddings, etc. But in spite of that, if you see most of the companies, the growth rate was lower than initial expectation. It was either negative SSG or low single digit SSG in most of the cases. Key exceptions were all the jewelry players and Trend. So if you see Titan, Kalyan, etc., also very strong growth aided by the gold pricing definitely, and market share gains from the unorganized. Trend continues to surprise on growth. If you see, Zudio is doing extremely well. And because of the operating leverage also, there was a 22% EBITDA beat by Trend. So Trend was a clear outlier in apparel. Rest of the apparel players had very muted growth. Most of the growth was from expansion only. And they were focusing on margin. So that was the good bit on the apparel players. Coming back to jewelry, Titan's margin saw some correction because clearly gold grew faster than the diamond studded, and gold jewelry is a lower margin business. Plus, because a lot of the unorganized players are sitting on higher inventory of gold, they had the capacity to do more of discounting. So generally, jewelry players strong growth, but margins for Titan were a bit weak, especially in the jewelry business. But this is a proactive step for growth to be on the accelerated side. Coming to QSR, it was weak SSG across most of the player. Key exception was Burger King with around 2.6% SSG versus that if you see McDonald of Westlife saw 9% negative SSG. So clear divergence. We are seeing that in slowdown time, there are companies which are able to grow a bit faster than rest of the players. Same thing was seen in pizza. So if you see Domino's grew better than Pizza Hut, which saw a big negative SSG. So we are seeing that even in a tough industry, there are players who are able to grow faster by market share gains clearly. Coming to innerwear, again, tough quarter, but good thing was Page posted 5% volume growth. So initial signs of some bottoming out, it seems. So that was the positive, but overall headline numbers for Page continue to remain quite muted only. So we remain overweight in terms of stock picks. We continue to like Trend. From longer term, we remain positive on Titan. Valuation comfort is a bit low there, but yeah, growth-wise, it will continue to do well. Market share gains will continue. In QSR, where growth generally is challenging, we prefer where valuation comfort is on the higher side. So we like Sapphire Foods there. We'll be cautious on Page and Bata, etc. So footwear industry continues to see very challenging times. So there we'll be cautious. So Bata had weak numbers. So that's the construct currently. We'll be cautious on the industry, but Trend and Sapphire Foods and longer term Titan look.
Yeah. No, we definitely want to talk to you about some of these outliers like Trend. It's been a solid move up. But just to complete this point, because you did say that Q3 was, of course, softer than expected as well. Where do you think revival hopes lie now? I mean, when do you expect that to really come? And if you could break that up into industries as well, do you think that is sort of several quarters away? Would you look at it, towards the second half of this year? When do you expect a meaningful revival to come in?
Yes, if you see what are the reasons for slowdown. So this is urban discretionary demand. So in our view, there are 2-3 key reasons. So one, of course, if you see, there have been a lot of job cuts in the startup industry. D2C companies have been focusing on profitability and viability. So we have seen a lot of job cuts there. Even in tech industry, if you see, instead of very strong addition and strong salary inflation, those two things have been missing. So that's on the jobs. Second bit, because of the interest rates being high, generally all the EMIs, etc., have been taking away more from the disposable income. So unless these two things change meaningfully, there is an issue. That's why if you see, in spite of base effect helping, because slowdown started 4 quarters back. So ideally Q3 already should have seen that benefit. So my sense is it will be back-ended. So mostly we should hope that from a Q3 perspective, the improvement should happen, or maybe if you are lucky by Q2. But currently we'll bet on companies which are doing better execution. Otherwise, if you see the recovery, big recovery should start more from a Q3 perspective when the interest rates come down or the job market in tech industry and the D2C and startups improve. That is where we'll see the recovery.
Okay, got that. Abneesh, you were just mentioning Trend, you were mentioning Sapphire Foods, which, you know, look better than a lot of the other players in this entire space. Take us through, you know, where do you really see that they're a lot better, the kind of outperformance that we can see from these levels as well, and how much of an upside do you think is still left in these two names?
So yes, definitely Trend is quite expensive. And yesterday I did see the CNBC analysis of Trend versus ABFRL. So what we see in consumption is faster growth companies continue to do better in terms of stock performance in spite of being on very elevated multiples. So Trend and Titan should do well versus rest of the peers in their industry. Coming to, I think, DMart, we have seen some signs of improvement in terms of margins and growth also. I think one thing which has been missing for Avenue Supermart is the store addition. Store addition for retailer is generally quite lumpy. So hopefully in the next few quarters, if Avenue Supermart is able to demonstrate better numbers on store addition, that could also recover. Nykaa also, frankly speaking, a lot of the key monitorables saw an improvement in Q3 in terms of the fashion, two back-to-back good quarters, and overall growth numbers, headline numbers were also decent. And generally, the D2C companies and the competition is focusing more on viability and lesser discounting, etc. So that was a good number, but the stock has corrected. So we could see that stock definitely catch up with the good numbers. Footwear, etc. Clearly, we continue to like Metro there. And in terms of the apparel business X of Trend, Manyavar also looks good from longer term. Of course, this quarter has been weak in spite of the marriage season, but definitely that's a good company in terms of execution, brand, etc. There has been a lot of competition in that space. So that's why we don't have that among our top picks, but generally that's a very good company. In terms of QSR, yes, Domino's saw much better performance versus Pizza Hut. But then on a standalone basis, the numbers are muted. But what works for Domino's will be, because milk cost has corrected, there could be slight margin improvement, but a lot of that is going towards promotion. So that's why in spite of gross margin improvement in the coming quarters, we need to see, because growth itself is challenging, is Jubilant Foods able to see good EBITDA margin improvement? So yes, so there are a lot of challenges for the sector currently. And that's why we have to be quite concentrated. Footwear, as I said, Bata saw weak numbers, and near term, we don't see any big recovery there.
Okay, got that. Very interesting chat, Abneesh. Thanks a lot for taking us through this space, how Q3 has really been, and the outlook going forward as well. We do need to get into a break now, but when we come back, we're going to bring you excerpts from our exclusive conversation with Amul MD Jayan Mehta. Stay tuned. We'll be back in just a bit.